How not to gamble our money in stock market. We should look for opportunities when and where to invest. Financial crisis gives big opportunity to invest intelligently. Financial crisis results when a financial asset drops suddenly on a period. Financial crisis lead investors in fear of losing money, and it was happening from the 1st century. If you are an investor or if you are going to start investing, this video helps you. Let's see. Today I am going to talk about 5 biggest financial crises in the world. Watch till the end to learn. First, the credit crisis of 1772. Alexander Fordyce, the partner of financial banks in London, brought most stocks of East India Company, which showed great growth. It all started from London to British and European countries. At that time people were confident about banks and relied on it. He invested people's money in East India Company speculatively. East India Company faced huge loss. He flew because to avoid debt repayments. After he flew, people lost confidence on banks and had fear losing their money, so they crowded to replace debt bills with cash. It was a major blow in British financial system. Secondly, the most worst financial crisis, named the Great Depression 1929. In 1921 America became economically wealthiest country in the world, where one of Americans had more money, and here stock market came into play. Reserve Bank was planning that how to make them borrow money from Reserve Bank, and so created more fake news of stock market. Even though the America was rising, Americans bought more stocks speculatively, believing in scams. I told in video that how to invest in stock market. Click I button to watch it. In 1929 1.5 crore stocks falls drastically. People had fear of losing their money and caved up in banks to change their stocks to cash. 6,000 banks went bankrupted. Unemployment rate become 24%, and a sandstorm on that period made US government to borrow more and more money. People suffered from Great Depression. Here comes people started to borrow money from Reserve Bank. This depression caused till 1939. Third, OPEC crisis. OPEC stands for Organization of Petroleum Exporting Countries. In 1973, oil price rose from $3 per barrel to $12 per barrel. In that period, Yom Kippur War happened, which was between Israel and Arabian countries. They decreased oil production by 5% every month from October. They made oil embargo to the countries supporting Israel during the war. It made countries like America to depend on foreign oil. It affected globally while people start to focus on conventional energies. Fourthly, Asian crisis. It started from Thailand, where circulation of Thai currency went down in 1997, and it made whole Asian countries to drop drastically, leading the economy downwards. After the World Bank made link to Thailand and other Asian countries to rose their economy. Lastly, financial crisis 2008. Everyone in the world is affected by this crisis. Let me explain. Banks made Americans to buy houses in loans even though they are poor. Everyone who bought new houses triggered others to do so. As the demand of house start rising, its price became high, where it's costlier than original value, so people stopped repaying loans. This leads stock market crash. It lead every other countries to unemployment and financial crash. There is a side effect for every crisis happening. We can make use of it to invest. To learn more about investing, buy the Intelligent Investor book, which its link is in the description below. To get more interesting videos, subscribe our channel. Thank you.